Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. A very interesting 24 hours we've seen in the market right across the board. Now, starting with the Australian dollar, the fact is that we're still seeing pretty much negative sentiment after the attempt to take on the challenge to the top side only got to 74.08 before turning around. It is seen, though, from a technical point that the RSI is oversold and the ADX is getting to a point where it's starting to overheat. I believe that we're not too far away now of possibly seeing a potential turnaround. Due to the immediate risk of the oversold conditions, I do expect, as I say, the sell-off soon to reach a point of exhaustion. That is in price and a turnaround for a short stage from 73.20 and maybe up towards this region of 74.15 to 60. But with the commodities being still weak overnight, mainly on copper, has given some concerns to the Australian dollar. It is seen, though, overnight that in Portugal, the Governor Phil Lurry said that he leaves with the possibility of accepting that inflation might just be a little lower than he likes at the moment. That's difficult for central banks to accept. However, the RBA did drop from its last minutes that that it was not looking for a rate hike due to more to the upside rather than the downside. That was removed in the statement, with rates still being left at 1.5% for 20 straight months. It's interesting to see that Larry is still keeping to his dovish tone. Nevertheless, the Aussie is still a little bit weak, so we could see one more test down today before turning around. The support region for the euro still holds around, in the broader picture, at 112.80 figure. It is viewed, though, that the market will test lower, but what will get the move up is a break above the index of 95. It did re-challenge that level again, but it still shied away from it. A strong break above there would give exposure at least 200 to 300 points. This in terms would ignite the downside, and a break of 114.85 would give the move to the designated target. Resistance at this point is still seen at 116.30.45. Meanwhile, in Portugal, also Mario Draghi spoke, and he promised that the central bank would take its time to lift interest rates, reinforcing last week's agreement by policymakers to keep borrowing costs unchanged at least through to summer next year. We will remain patient in determining the timing of the first rate rise and will take a gradual approach to adjust policy after that, Draghi made a point of in his speech. So from a technical point, let's see how the market plays to the downside, with the MACD also breaking down. It is a bit supportive to the challenge of 115.45 and reassess from there. Well, this time around is that dollar yen has inspired itself to the upside. Since rebounding of 109.60, the market is now looking towards the region of 110.55. That could lead on to 111.15 before profit taking is seen. But my picture of this coming through in the next 12 to 24 hours is a little bit on the contrary, due to the bearishness that we're seeing from the MACD and also the stochastic. So we'll see who wins the challenge in the next 12 hours. I believe it will be the bulls, but the bears still may have the upper hand. Dips towards 109.60 should still be in favour of a buy. We are currently at the moment pressing to the downside for the sterling and looks towards the region of 130.85. Now tonight at 9 p.m. at Sydney time, we do have the Bank of England statement and also rate decision, which is what the market is eagerly waiting for to see whether it's going to be a hawkish or dovish tone. And then at the end of the week, we do have Mark Carney speaking at an annual meeting in the Mansion House. It will be widely watched for clues of hints around Mr. Carney's expectations for the UK economy. And as I say, the Bank of England's rate decision is widely expected to keep on hold with the benchmark, rate at 0.50%. On the day, though, 131.45 to 132.10 is the given intraday range. The dark cloud still hovers over gold as it progresses further to the downside and posts a fresh 6-month low of 1,268. Gold is clearly struggling to recapture its bullish charm since Friday's plummet of $26 to $27. And with the concerns that the market is still struggling to rebound, could eventually see the challenge of this region, somewhere around 55.60. The immediate support at the moment is at 66, with the resistance seen minor at 76. And to wrap up with oil, well, the market did take a stab to the upside, but didn't quite sustain above $66. And now dropping back towards the region of mid-65, I do believe the focus is still very much on $62.4080, which is a measured move from the flag given from the break, and also the rejection from the broad uptrend, which is now serving as resistance. But that has risen slightly from 67. It's now around 67.80, so just be aware of that it has risen slightly. But overall, technically, I do expect to see this down challenge. And also to note is that into tonight, we do have the oil ministers from OPEC, Russia, and other major production countries that will meet in Vienna for 2 days on reviewing on the current production agreement. That might make the market a little bit whipsaw, so just be aware of that. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report, and I hope you enjoy the rest of the day that's ahead.